Baltimore's housing market just flipped, and almost no one saw it coming. Prices are sliding, listings are flooding in, and buyers are vanishing. But beneath the surface, something far worse is brewing. For years, Baltimore was one of the most affordable major metros on the East Coast. Investors from DC and Philly came hunting for cash flow. Local buyers could still afford homes, and median prices held steady through COVID, through 2023, and even into early 2024. Then 2025 hit, and something snapped. Active listings in the Baltimore metro surged 28.3% year over year, over 8,400 homes on the market right now. That's not a seasonal bump, that's panic. Buyers, they're pulling back. Mortgage applications across Maryland dropped nearly 12% this quarter. Demand is evaporating. And here's the wild part. Delistings are rising too, meaning homes are being pulled off the market unsold. Sellers are giving up. Rental inventory is ticking upward too, especially in the city proper. Units that once leased within a week now sit for over a month. Landlords are trimming rents or tossing in move-in specials. Even larger apartment complexes are offering incentives, waived application fees, parking discounts, or gift cards. It's a clear sign the renter pool is thinning. Baltimore's median home price dipped to $429,000, down 2.4% year to date. That's about $10,500 erased in 6 months. That doesn't sound huge until you realize homes are taking 32% longer to sell. Last year, 29 days on market. Now, 38. And that's just the average. Some listings, especially outdated row homes in Northeast and West Baltimore, are sitting for 60, 90, even 120 days. Sellers are offering concessions, repairs, closing cost credits, and still crickets. Confidence is shaky. Agents report ghosted open houses, no-show buyers, and lowball offers. Even new builds in suburban corridors like White Marsh and Owings Mills are seeing price adjustments, something unthinkable 2 years ago. Some pockets are getting crushed. Take 21224, inventory up 40% year over year, prices flat, DOM climbing. Same for 21206 and 21229, East and West Baltimore corridors with heavy rental stock and investor activity. Investors who bought in 2021 to 2022, they're feeling it. High interest rates, higher taxes, declining rents, and no exit. Even new investors on the sidelines are reluctant to jump in. Flippers are pausing projects. Small-time landlords are fielding offers from wholesalers and hedge funds. Investor chatter on bigger pockets and local Facebook groups has cooled. Everyone's watching. Few are acting. Baltimore is still technically affordable. Price-to-income ratio sits around 4.8, lower than most peer cities. But affordability doesn't matter if buyers aren't confident. Why the confidence drop? Uncertainty. Rising crime headlines, local economic churn, and the national headlines don't help. It's also about interest rates. A 6.75% rate on a $400,000 home, that's a $2,600 increase to monthly mortgage. That stretches the budget of even middle-income buyers. This isn't about panic, it's about paralysis. Buyers are waiting, sellers are stalling, investors are ghosting showings. Baltimore's median household income hasn't kept pace with monthly costs. That affordability gap is growing every quarter. If you're a seller, this summer is make or break. Price to move, or risk sitting stale until 2026. If you're a buyer, cash is king/queen, especially in zip codes with rental saturation. 21224, 21206, 21229. The bottom isn't here yet, but Baltimore is inching closer. Slowly, quietly, steadily. Baltimore's housing market is like a levee. Cracks are forming, but the break hasn't happened yet. You still have time to position yourself on the right side. The biggest opportunity may come from forced sellers, job loss, divorce, relocation, creating deeply discounted listings and otherwise strong blocks. If you're watching from the sidelines, keep watching inventory, days on market, and median price per square foot. These will tell you everything you need to know. And if you're curious to know about the housing correction and inventory spike in a city always making the headlines, check out the video I just made about Austin, Texas. And make sure to subscribe if you want the real data. No hype, no spin. In fact, here at Deep Research Real Estate, we pride ourselves in ignoring the headlines and only focusing on the data that matters. And make sure to drop a comment. Are you buying, selling, or waiting in Baltimore right now? And if you live in Baltimore, what are you seeing on the ground floor? Be our eyes and ears for us. Once again, this is Deep Research Real Estate. No fluff, just the facts. See you next time.